Crowds of tech lovers were supposed to be gathering soon at these booths. Instead, they're being dismantled and packed away. Organizers of the Mobile World Congress have pulled the plug on the industry's biggest event.
The GSMA has canceled MWC Barcelona 2020 because of the global concern regarding the coronavirus outbreak, travel concerns, and other circumstances that made it impossible for the GSMA to hold this event.
The epidemic has sparked an exodus of high-profile participants over the past few days. Tech giants such as LG and Nokia join other big brands which have all pulled out over health concerns as the coronavirus keeps spreading. The event's cancellation not only means missed business opportunities and costs for exhibitors, it's also a major blow for Barcelona.
We still had 1 week of work, and of course this is going to affect how much we will earn.
The MWC represents an estimate of $540 million in 3 to 4 days. We think it is, if not the biggest, but the best week for Barcelona in terms of the economic tourism impact.
The death toll from the flu-like virus dramatically spiked on Thursday, with 242 deaths in 1 day. 60,000 are infected, with that figure rising each day. It's the reason several companies have temporarily halted manufacturing in China, including Apple and Amazon.
Not only we talk about manufacturing companies and also especially retail segments and also hotel operators, restaurant chain operator and etc. But we can see the impact will continue, especially in mainland. I guess in the first quarter or even the second quarter will drag down the China GDP as much as 1%.
Dozens of other events have also been cancelled or postponed worldwide, including the Chinese Grand Prix. Organizers of the Summer Olympics in Tokyo say the Games will still go ahead in July. But with Japan reporting its first fatality from the outbreak, that decision may have to be readdressed closer to the time. Sibel Karkush, TRT World.
For more on the economic impact of coronavirus, I'm joined by Adam Vettis, an analyst at investment platform E-toro. Adam, thank you so much for your time. Now, markets appeared to have stabilised in recent days, but this latest spike in infections has just sent markets tumbling again. Do you think this will be short-lived, or will this be a prolonged effect because it's just renewed concerns about uncertainty?
No, absolutely. There have been a rise in infections, which is somewhat of a concern. But we also have to put this into perspective in terms of markets. The main markets are all still trading at or very close to record levels. All three US indices, the Dow Jones, the S&P and the Nasdaq, close to those levels. The German DAX, very close to record highs or beat record highs recently due to how low the euro is. So there are actually a lot of factors at play at the minute that the markets seem to be paying more attention to than the reaction to the virus. Of course, there's been stimulus from Beijing into the $250 billion, including interest rate cuts and restrictions on selling securities. So yes, there has been a bit of safe haven movement. We have seen an uptick in gold off the back of this, which is always somewhere where investors go during times of uncertainty. But there almost seems to be an assumption that, like other outbreaks, it will be contained, and the market at the moment is focusing more on the fact that there is stimulus being pumped in.
For those investors that do have jitters, is it the uncertainty that is causing them concern, or the fear for China-exposed stocks?
Uncertainty undoubtedly is always a factor for investors, and that does see securities sell off, definitely. However, at the moment, there doesn't seem to be the fear there that the markets are still at their highs. Yes, there are definitely concerns for China-exposed industries, and it's almost as if, even in a secondary way, almost anything is exposed. China is the second largest consumer of oil in the world. That's going to have an impact on oil producers, on manufacturing. If less goods are being produced, less goods are being sold. So we can look at globally all of the industries that are being affected, and yes, this will be an issue for those that are exposed to them.
When we look at some of the major global gatherings that have been cancelled, things like the Mobile World Congress, things like the Shanghai Formula One, what kind of damage does the cancellation of those events have, not just on the brands that were hoping to spruik their products, but also for local economies?
Yeah, absolutely. As you quite rightly say, it isn't much good for a brand's reputation to be cancelling such a huge event. That there are loads of them across the sporting world as well that are under threat or have been cancelled. Local businesses that are involved in the event obviously will suffer. Also local businesses who actually have nothing to do with the event that just benefit from the increased footfall and influx of people into those places. So yes, it's a huge impact. However, it could be argued that it's a necessary one, because ultimately, if the virus isn't contained, having these events that require such world travel and huge gatherings are dangerous for the spread. All in all, we won't truly know what the economic impact has been until the Q1 numbers come in a few weeks' time. But having said that, it's a necessary thing to do to restrict things in the meantime, even though it will have an impact.
And just finally, Adam, if you had a bit of a crystal ball, what do you think markets will be looking like, in the coming days, maybe into early next week? Will they have stabilised again? Will we see Asian stocks back up?
I think the most important thing with regards to the virus and looking more medium term is how the secondary transfer is happening among countries outside of China. We had a first case confirmed in London yesterday, and it's whether or not that these cases that are popping up elsewhere actually begin to spread and pockets of the virus become slightly out of control in other regions of the world. It almost has seen markets, particularly US, European markets, seem to have the assumption that things will recover. So unless there is a deterioration, it seems as though the focus is more on the stimulus at the moment.
Adam Vettis from investment platform E-toro, thank you so much for your time.